I'd like to take this opportunity to wish every one of you a happy Lunar New Year. I hope the Tiger Year has brought you some good fortune, good luck, this and that, right? But as we know, Meta, Facebook stock, actually it has not brought it luck. Actually, it has actually crashed. So, should we buy or should we sell? And we know that Meta actually has crashed by over 26% recently because the quarter results did not meet with expectation. Therefore, the market has actually overreacted. Hey, I'm Lily and I'm a Kashikoi trader. And Kashikoi in Japanese means wise, right? And I was actually one of the speaker sharing the same stage with Matt Smith as well as Rudy Lim. He's the CEO of OIO, blockchain company in Singapore. I was also one of the speaker in the WTH conference last year and also Binance Countdown Party. And most recently, I was sharing the same stage with Mary Buffett as well as Sean Xia in the Create conference in 2021. Now, before I even proceed, I would like to share this disclaimer that whatever I'm going to share tonight is actually just for educational purpose. So, whatever information when you take away, please always do your due diligence before you take any advice for investment. Yeah, always do your own due diligence. Yeah. Okay, let's proceed. Now, as I mentioned just now, right, the Facebook stock or Meta platform actually has crashed by about 26 over percent, right? And if you can see from a high, right, it was at that point in time last year, it went as high as about $380, thereabout, plus minus. And last night it closed about 225 with a red bar coming down. So with this plunged, but before I continue, right, to whether you should buy or sell or what you should do, let me share that I want to declare that I own FB shares as well, but I bought it at a much lower price. It's about like 41% lower than this price. Okay. Uh, so if you own FB shares, you may want to decide at the end of it whether you want to buy or hold or sell. But if you do not own any, then you want to decide later on as well after my sharing. Hopefully, my sharing will bring you more information, okay? And now let's take a deeper look at the earnings, not just by quarter, right? But by year to year as well. Okay, you can see that, okay, um, the earnings, right, per share, okay, is 3.67. It is actually down 5% versus what was expected, that is 3.84. But revenue wise, it has gone up by 20% versus what's expected. The daily active use actually grew 5% year on year. Um, but it fell slightly compared to previous quarter. Monthly active use actually grew by 9% year on year, and but in game based on the quarter, there is a slight dip itself. The average revenue per user actually went up. That is 11.57 versus 11.38. That's what expected. And the family daily user grew 8% year on year as well. You can see that a lot of it is actually positive, right? And the company repurchased some of the shares in Q4 with 19.18 billion, and they have another 38.79 billion more available for repurchase. So if the shares is repurchased means there's lesser stock in the market. So generally when there's lesser stock in the market, by right the shares should go up. Okay. And for Meta Reality Lab, which is augmented and virtual reality related products. They actually lose about 10 billion on a 2.2 billion revenue. But actually, it's pretty common, especially when you're talking starting something new. Usually, because it is at the start, so sometimes revenue would normally fall behind expenses, this and that, right? So why is it that most of it is positive, but yet there is a drop in the shares? But basically, most of it would be because of the so-called guided, or what we call it, the projected revenue by Facebook. For Q1 2022, it says is around 27 to 29 billion versus what is expected of 30 billion. Therefore, it is like this kind of results that affect the investors' mentality. Therefore, a lot of people fear that they're going to lose even more. So a lot of them would want to so-called sell off because of fear, for FOMO, right? Now let's look at another slide. Okay, if you look at the revenue here, this is the 3 months ended December. Okay, and this is a year to year ended December. Okay, and this is 2020 versus 2021. If you look at 2020, the revenue is 28, now here is 33.6. Therefore, it has an increase of 20%. Again, increase of 20%. And year on year, if you look at it here, is 85.9 versus 117.9. So it is actually has an increase of 37%. So it's actually very good, because I know most companies sometimes may not even be able to achieve that kind of revenue, but they have actually achieved a 37%, right? Net income is profit. 2020 and 2021, there is a dip actually from 11.2 to 10.2, a negative of 8%. But if you look at year on year, right, it's from 29.1 to 39.3, which is actually 35% increased. So again, if you look at these numbers, to me, it is really good still. The stock is still good. And where does the total revenue come from? If you look at here, the breakdown, the advertisement part, right, from quarter to quarter here is actually 27.1, all the way to last quarter is 32.6. And for the others, it's actually, there's a dip. Okay, and then for family of ads revenue, there is an increase as well. Therefore, the total revenue has actually increased. Okay. This is actually from Morningstar. Okay, so the key ratio I obtained from Morningstar itself. And if you look at the revenue over the last 10 years, from 2012 all the way to 2021, you can see it is actually increasing year on year, and this was a big increase here, the revenue, right? And if we look at the net income, which is a profit, again, it is a whopping increase, right? From here all the way. And again, let's look at free cash flow. Okay, it has also increased tremendously. And what do we mean by free cash flow? It has increased by 65.5%. It means that when a company meets its operating and capital expenditure requirement, the free cash flow is therefore the money left over after the operation and capital expenditure has been fully so-called catered for. Yep. So this is really extra money on hand. Now we look at here the long-term debt. You can look at Facebook. It has zero debt other than 2012, right? Zero debt. So this is really very, very powerful, because sometimes, having no debt is really good for the company. Yeah. And this is the valuation. Okay, I'm going to look at the valuation, because like I mentioned just now, let's say if we own the stock, is it still worth it to keep the stock? So valuation would play a very, very important part. For me, I know why I went into FB stock. Okay, and this valuation from Morningstar actually tells me, if you look at the PE, price over earnings, right? It is currently trading at 7.2 PE versus the 5-year average of Facebook, which is 30.8. So it is actually undervalued, right? So this is from Morningstar. Now let's look later on at okay, the valuation from Simply Wall Street itself, right? Simply Wall Street, if you look at it here, it says it is trading, means the current price of Facebook is trading 63.1% below the estimate of their fair value. So their fair value is high. Yeah. So this is actually very much undervalued. Now let's look at another one. Let's look at Tip Ranks itself, which is another platform. We can look at it for valuation as well. So if you look at the analyst price target for Facebook, it says it is 330.35. And what was the last traded price? It's actually 225. We saw just now, right? It's 225 or 224.91, which is 225. And over here, it says here that from the analyst rating, the consensus is 31 says to buy, 10 says to hold, and 1 sell. And if you look at their highest price target from this tip ranks itself, it's 4 to 5. The average is what is reflected here. And the lowest price target is 2 to 5. And we know that the last traded last night was actually 2 to 5. Yep. So it is really at the bottom. Okay. So it's way, way undervalued. Now let's look at one more. Okay, Guru Focus. Here it says it's really jump out at us. It says it's significantly undervalued. Yeah, it's significantly undervalued. These are all the latest data. And if you look at this black line, this is where the fair value it is. Fair value line for Guru Focus. GF is Guru Focus. And the price at the moment is actually here. So it is about 225. So it is really, really significantly undervalued according to all these platform. So is it time to buy or sell, or perhaps just to hold? Okay. So with this information that I share, regardless of what is your decision, please always do your due diligence before taking any action. And to wrap it up, let me share a famous quote from Warren Buffett. He is what we call the wise value investor himself. He says, be fearful when others are greedy, be greedy when others are fearful. Now we know that a lot of people are fearful because the market has dropped. Okay, that's why they are dropping, they are selling the shares away. So it's fearful. So is it time for us to be greedy? It's a question mark. It's a question that I'll leave it to you to decide. So I would like to thank you everyone for taking time to spend time with me, to listen to what I have to share today. So do your own due diligence again, and Happy New Year to everybody. May the Year of Tiger bring you to greater heights in terms of investment and finances. So we'll see you in the next live. Bye.